Hi and welcome to another video with me, Sam Indyk. Here today, I'm joined by Adam Linton, who's a senior markets analyst at Newsquawk. Hi Adam, how are you?
All good, thanks. Just getting prepped for the ECB and more importantly, the Euros, which begins at the weekend. How about yourself?
Yeah, very good. Thank you. Very good. Today, we're obviously here. We're going to be talking about the ECB interest rate decision. So what are you expecting today on interest rates at this meeting?
In terms of interest rates, not really looking for too much change on that front. So all three key rates are expected to be unchanged. So that'll be the deposit rate at minus 0.5%, the main refi rate at 0%, and then the marginal lending at 0.25%. In terms of the lower bound, central bank speakers have stressed we're not at a lower bound yet. There's nothing to suggest that the ECB are inclined to add any further stimulus at this stage. Market pricing is also relatively reflective of this, with just a 5% chance of a rate cut at the upcoming meeting. And in terms of rate hikes, that's very much not a topic that we're expecting to see any indications of at the upcoming meeting. Instead, as has been the case for many central banks throughout the year, the marginal tool is very much seen as the balance sheet.
Excellent. So what they're expected to say on asset purchase then, do you think they could begin to maybe slow asset purchase over the summer?
So just in terms of pretext for the upcoming meeting, obviously in March did see the ECB adjust their guidance when it comes to asset purchases and state that purchases are going to be conducted at a significantly higher pace than what we saw in the early months of the year. That has very much borne to fruition, with purchases running around about 80 billion euros a month. And in terms of pretext for the economic environment, so have seen gradual reopenings of the Eurozone economy and a relatively successful vaccination campaign by the EU. However, it's not necessarily the economic environment alone which is going to be the guiding force for the ECB. So one of the key aims of the ECB is the preservation of favourable financing conditions. So that's those indicators within the economy which drives like investment and consumption, and in turn economic activity and inflation. So on that front, we have seen some indicators that tightened since the prior meetings. I've seen upside in some Eurozone bond yields and some widening of some key spreads in the Eurozone, such as that of Italy and Germany. Some of those have come in a little bit since mid to late May, but ultimately there has been a tightening nonetheless. Some central bankers are a little bit divided on what that exactly means and where it's necessarily warranted. So I've seen likes of Germany Schnabel suggest it's what you would expect to see at this stage of the recovery. However, some more dovish members, such as ECB's Panetta from Italy, suggest that any such tightening is warranted. Ultimately, it's likely to be judged that although financial conditions have tightened, they do remain favourable. And one of the arguments put forward by the doves is that the favourable financial conditions are predicated on the fact that the ECB is going to continue to provide support. And as such, consensus for the upcoming meeting is that the pace of purchases in Q2 will roll over to Q3, at which point we'll have the September meeting. We'll have more indication as to the strength of the Eurozone recovery, and we'll be further down the line when it comes to the inoculation process within the Eurozone. And just one other point when it comes to asset purchases. So the PEP program is very much an emergency program that's set to end in March next year. Currently has an envelope of 1.85 trillion euros. As we progress throughout the year, there'll be many conversations on how that program will be unwound. Many expectations are for the conventional APP program to be bolstered next year, which currently runs at a clip of 20 billion euros a month. However, we're not likely to see too much in the way of giveaways in terms of how that will necessarily take place at the upcoming meeting, but just important to be aware of those potential developments.
Great, thank you very much, Adam. So nothing really expected on interest rates at this meeting, nothing too much expected on asset purchases either. So what is the ECB's view on inflation? Obviously, we've seen the Fed and the Bank of England, they say that they expect this current rise or increase in inflation that we've seen to be transitory. Is the ECB sort of in the same boat? Inflation obviously hit their 2% target at their most recent print.
Yeah, as you mentioned, they are very much in the same boat. So we did see inflation hit 2% on a year-on-year basis. So in normal times, that would be that ECB would be at targets or they're close to but below 2%. However, as we've seen, which has been a key theme throughout the year, a lot of this uptick in inflation has very much been driven by some of those year-over-year base effects, as well as some of those supply chain bottlenecks. Chief Economist Lane has also been pretty explicit in this, and he's also noted he does not see the case for persistent inflation within the Eurozone. It's also expected to be hammered within the accompanying macroeconomic projections, whereby the 2023 projection is expected to come in at just 1.4%. Obviously, we do have this ongoing strategic review at the ECB, so the findings of which are set to be presented in September. However, though, whichever way the ECB does alter its inflation mandate, 1.4%, if it did materialize in 2023, would likely be a disappointment on that front. So again, the ECB are going to set to stress the transitory nature of inflation at the upcoming meeting.
Perfect. Thank you very much for that response there, Adam. And in terms of the single currency, the euro, do you think they'll likely be concerned about the euro? We have seen it strengthen slightly against the US dollar in the last couple of months.
So in the past couple of months, there was an appreciation of the euro, some of which did actually take place before the last meeting. And in the account of that meeting, we did see the ECB acknowledge it, but not really place too much weight on it. Since then, we have seen a bit of an uptick in euro against the dollar, and also on a trade-weighted basis. But again, I don't think it's necessarily of the magnitude that's going to concern policymakers at this stage. So as such, we're expecting to see the ECB reaffirm its commitment to closely monitor FX developments, but stop short of anything more punchy when it comes to intervention.
Brilliant. Thank you very much. And is there anything else you'd like to add about what to expect from the meeting?
Yeah, so just kind of piecing it all together, really. So the key is going to be any developments on the balance sheet, as I mentioned, and also kind of balancing that against the favourable economic conditions we're kind of seeing at the moment. So, like I said, the reopening of the Eurozone economy, very successful vaccination campaign we're seeing. So it should be relatively upbeat and encouraging. However, the ECB will need to stress that they are going to be able to provide the market with the support that it needs. And that's hence why they're going to be looking to extend those pace of purchases seen in Q2 into Q3. And just in terms of preparing for the event, just one thing that I always like to do, make sure I have, is always have the old policy statement next to me whilst the release gets announced. Just learn that the language that they use. So on the day, I'll be able to detect any changes in language much quicker. That's also the case for the 1:30 press conference, because relatively formulaic in the introductory remarks. So you might see some subtle shifts in the language on that front as well. So currently risks surrounding the euro area outlook are currently judged to be tilted to the downside. We may actually get a bit of an upgrade to a more balanced view. So some of those nuances are going to be key on the day.
That's a great tip for traders there, keeping the two press conference statements and everything next to each other so you can see any changes. That's really great. And finally then, Adam, thanks very much for this, but where can we find some more information about Newsquawk?
Yep, so if you head over to newsquawk.com, you'll be able to see what we do on our website. You'll also be able to sign up for a 7-day free trial if you'd like to tune into our coverage of the ECB. We also post some of our research on Investing.com, which will help traders get prepared for the event. We're also relatively active on Twitter. We post some of the insights from the desk, as well as some relatively cheesy jokes.
Great. Well, thank you very much for that, Adam, and I hope you have a good time alongside the ECB decision. And yeah, thank you very much.
Awesome. Thank you.